All right, welcome in everybody. See a bunch of people jumping in. We'll give you guys another couple minutes before we get started, but welcome to the second AI circle of, what is this, March now. What is it, the first quarter is almost done. It's crazy. We will get started in a second. Like I said, I see some people just following in. I know you guys are a couple seconds behind. I realized on the last few, I haven't reintroduced myself. So some of you might not even know who I am. You know Kelly, because we talk about Kelly all the time. But I am Lee Gearhart. I do a lot of things customer facing in the company, whether it be setting up accounts, helping with support, you name it. Done a lot of things. I've met a lot of you that join us on these calls. But for those that don't know me, realized I should probably introduce myself. So while we're letting other people come on in, let's welcome in Mr. Kelly Korshak. Kelly, how are you today?
I'm well. Thank you, Lee. Thank you very much. And thanks everybody for attending this into first quarter 24 AI Circle.
Yeah, I'm liking that shirt. I know that people can't see the pattern, but I like it.
Thank you, Lee.
I think
Yes.
last time we both had blue on, and we decided to keep everyone on our toes this time. So let's, before we get into any market updates or anything like that, we have to do the fun part of our disclosures and disclaimers, I guess, more specifically. So iFlip Investor Inc. and iFlip Financial Services are not financial advisors and do not make, buy, sell, or hold recommendations on any financial instrument. This presentation is for educational purposes only. Unique experiences and past performances do not guarantee future results. All financial investments involve risk. You should speak with your CPA or financial representative to ensure that the iFlip Smartfolios that you select are suitable for your investment profile before trading in a live brokerage account. So with that out of the way, I'm going to actually go to the agenda. For anyone new joining us who doesn't know what the heck this is all about, we'll spend the first maybe 10 or 15 minutes. Kelly's going to go through, he'll share screen, he'll talk about the markets and just kind of give a overall update, if you will, on that. And then we do actually have a handful of recent trades that AI has made, and we referenced as to why they would make some on the last call. So feel free if you'd like to go revisit that one. That was 2 weeks ago's AI Circle. So we'll spend some time on that. And then probably the fun stuff is the Q&A. So this is your opportunity to ask any questions you guys might have about the platform, any questions about the markets in general. And that is actually your key to potentially winning an Amazon gift card. So we will do all of that at the end. But without further ado, Kelly, let's have you share screen and let's get right into it.
All right. Well, again, hello, everybody. I'm going to say also thank you today. I notice a very dear old friend of mine is also attending, Carolyn Broden, sometimes known or formerly known as the Fibonacci Queens for you people out there that actually trade. She's actually a pretty famous person. Feel free to Google her. Let's begin and start like this. So let's look at the Dow, everybody. Everybody knows that we had another good day in the Dow Jones, up almost 500 points, give it just shy by 23 points. Why? That's because there's a bid on the market. There's just no denying the bid on the market. Interestingly, the NASDAQ was up just 0.4% today, 0.4. But the Dow, of course, is up 1.2. This is a bifurcated market. The market really has cash flowing into certain indices and certain stocks, sometimes at the expense of other things. If you look at the Magnificent Seven, by and large, they were down today. So the market's rally today was more broader in scope, at least in terms of the S&P and the Dow Jones, which is a very small index. So we are essentially at new highs. And if we are not at new highs, we are just off of them. The market has a bid. It will continue to move up until there is some catalyst that hurts it. What the catalyst can be will be an ongoing discussion of AI circles and any other commentary that comes out of iFlip. Again, as commentary, as we all know, I don't offer advice and neither does Flip. But by and large, what's going on around the markets? I always go through this process and we'll start again. Let's look at the dollar. The dollar, here's a chart of the dollar, everybody. Basically, it's going nowhere. It's in a band. If you can see blue lines around there, those are bands. This is what international currency markets like, for their currencies to trade in a certain area. That way they can figure out how they buy and sell goods to outside countries. And they have a very known and established price, which means they establish their profit margins for the companies in both countries. This is not telling us to do anything right now. It's just saying, hey, the market and the dollar are basically stable. If we look at the bond market, well, again, we had the rally in the bond market from the bottom of November, along with the huge stock market rally. However, since then, we seem to be making new lows, lower lows and lower highs. This seems to me, again, as a continuation of a grind lower in price and with marginally higher interest rates. So the Fed has already signaled that there might be 3 interest rates this year, interest rate cuts. Right now, we haven't seen one. The market had already anticipated that we would have 7 this year, and we have had 0. But it's only the first quarter. The market still continues to get the bid, given that A, it's an election year, and B, the Federal Reserve during the election years rarely does anything big on interest rates. So we may see some cuts. However, we may not. And the longer those cuts don't occur, or even if they do, I suspect the market could sell off on those events. So for now, if there's no cuts, the market will rally in the anticipation that they will come. And when they do come, what's left? Basically, the old rumor of buy the news and sell the fact. We shall see. Let's go to the NASDAQ and take a quick look at that. Again, off the new highs. We are trading in an enormously successful bull market on the NASDAQ. The Russell, guess what? We're not at any kind of a new high. However, we are at the highest levels since last October, November, since the market has started its rally. And so we're not up much on the year in the Russell. And just for basic facts, the S&P is up about 10% right now, year to date in the first quarter. It's awesome first quarter. The VIX, I think some of us follow, as you can see, this is going down to 0, it seems. So there is no reason to feel that there's anything bad in the world. The VIX is saying there's no volatility, but because all the volatility is on the upside. So the VIX is a no-brainer. You don't do anything when you see a VIX like this. Tells you should stay long. Most of our portfolios, as you know, are long. Not all of them, but most of them. Let's look at the Mag 7 real quick. We can go into Q&A pretty quick today. Mag 7 was mixed today. Apple is flirting with breaking 170 constantly, and it keeps bouncing. Clearly, there's a bid at 170 on Apple. However, I feel that Apple is basically better priced at $130 a share, so I am not sanguine about Apple. And if we take a look at Google, it's right on its highs, but again, it seems to be pretty stubborn. It makes its highs, but why? What is the reason? And it is not moving in conjunction with the other stocks. It's basically between about 130 and 150. We're on the higher end right now. Meta, call it highs. Amazon, call it on the highs. Microsoft, call it on the highs. Netflix, same. Nvidia, of course. Tesla, it's doing nothing. It's weakened because we all know what's going on in the electrical car market. Basically, the demand has gone away. And that brings us, of course, if we're going to talk about that, we should also go to quickly, I can tell you the banking sector. Look at this, Bank of America. Making a new high in here today. And if we go to Charles Schwab, basically the same. JP Morgan, obviously the same. Even Goldman, which was a huge laggard. They were looking to get rid of their CEO, decided, guess it rallied $100 in a couple of months, saved his job. Oils. Well, here's the oil market for Exxon. Basically near the highs. It got a high is around 120 a while back. It's basically there at 115. let's look at the one main leaders we have in the red oil Smartfolio. Here is Energy Transfer. Energy Transfer, since we started pointing it out, is up about 40%. We were buying this stock at around 10 and 11. And so there's our 40 to 50%. And it pays an 8% dividend. I think that's a big piece of why we like this stock. The other follow pipeline is All Plains American, another one of my favorites that we've been holding. It's so simple, so cheap, pays a good dividend, and it's in an industry that I think will push these stocks again, and I reiterated, to about $24 a share each, maybe a little higher for All Plains. And that, by the way, still represents another 40% gain on both of these stocks, what I feel could happen by the end of this year and pay us that dividend. So I still am very sanguine on these and the oil sector. Let's move real quick, of course. What is a day without Bitcoin? So I'm going to look at the Global Bitcoin Trust for now. We know all about Bitcoin this year. Of course, it's rallied up and it made a brand new high, all-time high, recovering from the prices that we saw back in February of 2001. Bitcoin has a way of doing this. These big, wide bull bottoms followed by these big volatile tops. Now, the question this year is for a lot of people is, will this either continue or will it do the summer swoon? My instinct is the price of Bitcoin, as I mentioned 2 weeks ago, I think it does show to $100,000 a coin sometime during the summer. And that, by the way, folks, is about 3 to 4 months away when we're smack in the middle of summer. And that tells me if we're paying basically at 70,000 now on Bitcoin, that's essentially saying we're going to be up another 40% in the next 4 months. Is that possible? Of course, anything is possible with this. But the other question is, and many people have this fear, that anybody that had bought prior to this a couple of years ago and they got all their money back, there's going to be some supply at prices like this. So this is one of the reasons why we see this kind of top forming. We had a high of 73,000 up here. Actually, maybe I'll go directly to Bitcoin itself so we can see it in its true values. For Carolyn's edification, there's some Fibonacci numbers I ran myself. She's not the only one that knows how to do a little of this, but with nowhere near the expertise. That we have come up and made our high. We had a fallback, a huge 10% day on one of the days on the New York Stock Exchange trading day. But as you can see, we almost made a new high, and now we've fallen back today. I wouldn't be surprised at all, again, to just see this resume a slower move higher. And by the way, it's worth mentioning that we are this close, folks, to a flip coin. We don't know the exact name we're going to give it yet, portfolio. And I will describe that portfolio a little bit later, and there will be a complete description of it on our website. And I suspect that we can have this by the end of the week, if not early next week at the latest. So this is coming. It is here. And I will give us further description of it before the end of this podcast. This is very important to watch. This is something you don't put all your eggs in, of course, but this is something that deserves 1% or 2% of anybody's portfolio. So again, with that, let's see if I can see. Here's one of our portfolios today, our balanced portfolio. I'm going to show it to you how I get to observe it. So these are all the things that we have in the balanced Smartfolio. I observe it so I have a way of easily looking at the prices of everything. We are not in all of these stocks. For example, one of them, actually, I forgot. I took one of the stocks out, Boeing. It used to be there. It is no longer there. And I think we all understand why we do not want Boeing to clog up our essential index, which is we call the balanced portfolio. It was a dog. It didn't help us. It didn't hurt us, but we're not trading it because the AI has it out and it has it out for the foreseeable future. So why keep our money on the sidelines? Let's update it. That's what we should do. And so we did. And that will always happen quarterly or when needed, because it's very obvious to see when AI indicators, which we call a predictor, it becomes extremely negative. It's very hard for it to get out of the hole. And we know we won't trade it. So therefore, we should replace it. And that's what we do. We kick things out that can't perform or can't get a signal. So that's something important to note. And by the way, notice here, we do have even a small piece of Bitcoin in it. We do it through the GBTC. Actually, it will be the IBIT, the one above it. So you will start to own a percent or two of this when you buy a balanced portfolio. And the idea here is to have something like this, which is a heavy hitter. It's like a home run hitter. It strikes out frequently, but every now and then it hits a home run. And when you hit home runs, it can affect the entire portfolio. And that's extremely important. I'm gonna, by the way, look at another thing we added to the balance. It's the Verizon. And we've added Verizon because it gives a dividend, a good one, about 6.7%. However, sorry, everybody, the phone ringeth and I must take it off. So the problem the issue with Verizon and why we added it, and we took a little money away from AT&T, but we like AT&T as well. Here's AT&T. But the reason is I wanted to allocate more to telecommunications. It makes more sense right now. Also, that's what the math says when we do something called the efficient frontier allocation model, which is the way we say how much do we put into each symbol of our money, what percentage. And that's a very important thing. And this makes it balance out better, and it was additive. So we do that. So remember, we're not just working with machine learning, we're working with advanced correlations and something called covariance that form together a way to optimize how much of your money in a portfolio is going to each and every symbol. It's extremely important to do that. You don't optimize all the time. You optimize periodically. And even though I always have issues with the word optimization, all we really want to do is kind of be in the right area. You'll never know what the peak of the mountain is, but you got to climb close to the top to kind of figure out it's over there or over here. And you can argue which is the highest spot, but we just want to be close to it. So there is a lot of advanced mathematics that is performed behind the scenes, both by our code and by spreadsheets, so that we can keep things in their optimal positions. Let's see, that brings us to 248 we got. Let me see if I'm going to want to look over one more thing over here, everybody. I'm going to go back to, I want to go and look at the oil markets real quick. I think this is worth noting. Okay, this is crude oil futures. Now, nobody at iFlip trades futures, I understand, but we do have positions in the oil market. So generally, when we go into summer, oil markets tend to do better. And they do better because it's a driving season, vacation season, etc. But we're moving into this particular summer already from a high position at about $81 a barrel. Keep in mind that Exxon is now at 114. Its high was 119. Without getting too deep in the woods here, it is notable that we could see some spiking of oil in the months to come. And I mean spiking. In other words, back up to possibly $100 a barrel. I don't know what the reason or catalyst would be, but these are charts that I would like to own personally as a chartist. Also, our predictors are very high inside of companies like Exxon or All Plains. Things that are oil related are giving us very solid predictors. And by the way, a predictor is just a number that the machine learning produces to tell us the probability of movement one way or another. Positive movement means it's a positive predictor. Negative predictors mean negative movement. So there are a lot of signs out there that are saying that we should be in the oil markets, and we are with red oil if you have it. Finally, might as well take a quick look at gold. Never hurts. I've never been a bug. It looks like I have to move my head. But we're at about $2,200 an ounce right now. Those are highs, folks. Now, my belief in the gold market is much less sanguine than it is in the cryptocurrency market, but it's no way we should not just completely dismiss gold. I think not so much that we want to own it, but it is a predictor of the issues that exist around our world. To me, this predictor is telling me that we are still in an inflationary environment. Even though the numbers are down, gold historically generally does well for two reasons. One, minimal interest rates. Interest rates are not super low, but they're kind of a 4.25 10-year note is really the historical rate we've had on 10-year notes. And if you think about it, our 30-year bond is just a little bit higher than that at about 4.5. 30-year bonds generally correspond to a mortgage rate. It's not that case right now, and that's for the reason because the yield curve is inverted. But over time, what this means is that the environment for cryptocurrencies and gold, alternatives, things that change the way your portfolio behaves, are going to be in high demand. And so I see this trend continuing through summer. And in summer, I think we will have some form of reckoning at that time. So, one last thing before we go to Q&A. Generally, April is a come-uppance month, so we could see some volatility in April, but I suspect it will be short-lived. April is not generally a good month for the markets. It doesn't mean it's a bad month. The worst month has always been September, but this is something noteworthy that as we move into April, especially after a 10% move in the first quarter in the S&P, again, suspect some short-term volatility over the next 5 weeks. And with that, Lee, let's go to the Q&A, especially anything regarding around the Smartfolios.
Yeah, and you've already kind of said it, but just to recap everything about the new Smartfolio or the new things in the Smartfolios, the AI, to me at least, didn't seem like it made any trades because it thought it was worthwhile to get into something. It was more just reconstruction of the Smartfolios. You mentioned Verizon, the IBIT, a couple other things as well. Is that accurate?
That is very accurate.
Awesome. And just a fair warning, we've got a lot of good questions tonight. So I already see some contenders for our winner. We're going to go chronological order here. So Bobby asks, any thoughts on replacing the SPY with the triple Q or creating a Smartfolio including the triple Q? I know we used to have a all market ETF that had both of those, and I think it had the IWM as well, if I remember correctly. But what are your thoughts on this?
Well, it's a good question, and let me think about the value of the question. First of all, I would never replace the S&P 500 with the triple Q. There is a reason for that. The triple Q is a very short and small index that represents 20 stocks or 30, just even less than the Dow. And the problem with that is the whole weight of that thing is basically the Magnificent Seven. So we do have a Magnificent Seven portfolio now, if I'm correct. And if we have that, we really don't need triple Q. Triple Q also does not represent the overall market. It really does represent the Mag 7. The problem with that is that is way too volatile to represent the overall growth of the stock market as a whole, which has always been designed as the S&P 500. And so therefore, we always will keep the spider. That being said, we did used to have a portfolio that just consisted of 3 ETFs, the IWM, which was the Russell, the triple Q, and the spider. Just a third, and a third. However, that portfolio, the issue with that to me is that it is too broad-based and it's very difficult for me to figure out the correct hedge. We might as well belong, say, the Russell 5000, which represent the very broad stock market, and call that our proxy and just have one large ETF. One ETF inside of one Smartfolio. And what's the real point of that? we can do that manually by just buying the individual component, and then have the ability to put the only value of the Smartfolio is to add the machine learning to it. So right now, the work I've done doesn't suggest that we really move into the triple Q way, because we can get what we want out of some of our other portfolios, like the Mag 7, or I think the Mang is still there, which is the old FANG stocks. So that's my reasoning for pulling that thing out, because I don't think it represents exactly what iFlip really wants to do.
Sure. And Bobby, just to add one thing, if for some reason you like the triple Q more than the SPY, you can always create a custom Smartfolio and just put the triple Q in there. Or you could use, the aggressive portfolio as a base, and just kind of swap out the SPY for the triple Q if you really want to. By no means do you have to, but just an option. Go ahead.
Go ahead. Ask another question, because I want to kind of circle back to the triple Q.
Sure.
At some point.
The next one, I'd like you to reiterate it if I'm understanding the question right. But Francisco said, what stocks are going to be on the Smartfolio? I think he means the new one. Whether that's the Bitcoin one or the changes to the Smartfolios that we just implemented last week. Feel free to take that and run.
Yeah, the changes were kind of simple. I alluded to the balanced portfolio, and the aggressive had some changes too. So did the conservative one. All of the portfolios got a small allocation of IBIT, which is the Bitcoin proxy. Aggressive and balanced got 2%, and even conservative got 1% of allocation towards Bitcoin. We did pull some stocks. Boeing was pulled from aggressive and balanced. We've added some stocks in the balanced. As I noted, we added Verizon and pulled away from AT&T. We changed exposure levels to higher exposure in the pipelines, PAA and ET. So before we owned 1%, we own 1% more of each. So again, that's part of what we call that efficient frontier balancing, where we use covariance and correlations to figure out what is the exact right size, the optimal size of what we should allocate. So the changes in the Smartfolios were those aforementioned symbols, and also marginal changes inside of the actual allocations of each of those symbols. Overall, by and large, those portfolios look the same. Most of those stocks, if you look in those portfolios, are at their all-time highs. It's very hard to change one stock that's at an all-time high with another stock that's at an all-time high, especially if we don't really know what that change would represent in terms of where we would sit it on the efficient frontier. And again, efficient frontier is short word for variance, covariance, to optimizing. So those are the changes that were made. They're really more of a tweak to the portfolios and a better way for us to move into the next quarter with these stocks. These small changes we feel will help optimize our reward versus risk over the next 3 months.
Awesome. Pamela asked about MicroStrategy. I think we talked about this a little bit on the last call. Somewhat of an indirect way into getting into crypto, right?
MicroStrategy?
I think it's MSCO. I could double check that, not to put you on the spot if you're unfamiliar.
I mean, there's all kinds of, I think, symbols that are trying to represent coins of kind. For example, there's an Ethereum ETF as well, but I'm not interested in Ethereum as a secondary product. I feel, again, I think most people out there know, at least these are how I opine. To me, there's only one car to drive here, and it's the Cadillac. And everybody knows that the Cadillac is Bitcoin. There's a million reasons why. There are some reasons to own Ethereum or maybe other symbols that represent some cryptocurrency. But I can tell you this, the most efficient one is IBIT. IBIT has created a kind of a new dynamic. And by the way, everybody, I don't think it takes much to figure out that if I take a look at this symbol, here's the IBIT. This was the day it launched, which was the January 11th. What has it done since it launched? It's basically made a new high. Why? That's because BlackRock is behind it and they've legitimized the product. They've made the ownership of Bitcoin very, very efficient. That is the huge advantage of it. And that's why they didn't do that with Ethereum. They didn't do that with Litecoin or Dogecoin or any of the others. They did that with Bitcoin. And the reason is because the reason this, when they put together this ETF, all I've noticed other than the first week is the price has gone to the moon and made brand new highs. There's no mistaking that there's a reason behind it. It's because of the efficiency that BlackRock has created inside this ETF to be involved in Bitcoin.
Yep. Before we get, it looks like there's 3 more so far. Before we get to that, I'll just do the little announcement about this. So part of the Q&A or your reward for asking good questions, you can actually win a $25 Amazon gift card. How basically this will work is we'll pick what we think is the best question that was asked tonight. All you need to do to claim your winnings, if you're our winner tonight, is email mailbag@iflipinvest.com. Just give us a screenshot of your account. It is a requirement to be an iFlip user, and you also need to use a Smartfolio. I think our winner last week was in the process of getting it set up. So if that's tonight's winner as well, we can work with you to an extent. But I just wanted to let anyone who's new know that the Q&A portion is not only fun to answer your questions and all that, but you guys can also win as well. So which is always no one dislikes winning, at least no one that I've met.
Let's
go ahead.
Those final 3, I see what they are. I think one is Domino 05, whatever, is as of 2022, the yield curve is inverted. Should we worry about the track record that a recession always occurs? I got to tell you, I would have answered that question 6 months ago. Yes, we should worry. As the market has gone up like this, I think I think we all should re-examine why the yield curve inverted. The yield curve inverted because $9 trillion were added to the economy since COVID by the government. The government is the country's largest employer. Most of my lifetime, that was not the case. What's happened is government has stepped in, by the way, worldwide, and put their own currency. They have printed their own currency to keep people safe in their homes and making sure they got paid and they could eat. That was all done by worldwide governments. We can argue whether that was good or bad, but regardless of that, it did happen. There is so much money slushing around out there. And that's the thing. I've always been driven crazy with all that money. Where are they going to put it? Well, they have put some of it into the bond market, but it's not all going in there. A lot of that is going into the stock market. And there is no doubt that if you look at the GDP numbers, they're coming out strong. That's not indicative of any kind of recession. And I hate to say it, it looks to me like this is one time that the inverted yield curve is not going to play out the way it expected by all the pundits, including myself. So, yeah, I don't know if we're eating crow, but I can say this. I do follow these kind of things generally, but this is a case where in every other recession, I can't remember one of them where the government pumped $9 trillion into it, creating an inverted yield curve, and making it look like short-term money was tight when it really wasn't. I mean, the money is there.
Yeah.
And that's why, by the way, it yields more. People are willing to actually pay more for things. So right now, people are not as, before we could get an auto loan for 2% and a mortgage for 3%. Now we pay a mortgage more like 6.5 to 7, and car loans look more like that now. So we are really in a kind of an interesting new paradigm. So I don't feel we should worry about it right now. There is no reason to worry about it, especially over the next 3 months. How about the next one above that, Lee? I'll answer that. That was from Ethan.
Yep.
And yes, you're correct about the dividends. However, the AI is smart enough. We do try to keep dividend stocks in the market because there's a way we can do that algorithmically. And the way we do that is because these things have predictors that are generally in confines. Things that offer dividends are either doing two things. One, they're moving up with very slow slope. And a perfect example of that would be this stock. This is the All Plains American. Look at how they're moving up. It is not really advancing quickly because we've only moved from, say, here's 11 to 17. We've moved up $6. That's huge. But if you notice the way it's doing it with very little volatility. And so it's easy to stay into this stock, even if you might have some sell signals that came periodically. We don't want a sell signal to overlap our dividend and not collect that because we're really there for the dividends. So you're correct. If we just used our AI on a symbol that was paying high dividend, but it had a large variance of predictors, then you're right, we could lose it. But what we've done is found the stocks that have very narrow predictors that are very unlikely to be able to say, hey, we have a sell signal, and then that sell signal actually would pull us away from taking a dividend. So we manage it the best we can. Yes, we will miss a dividend here and there.
Yeah. And I haven't honestly
on every stock in the portfolio.
No. And I mean, this could be wrong, but it seems to me like, not that they're just stable and don't go up or down, but a lot of the dividend paying companies we have, it's not like they're going to, knock on wood, have a 20% drop or something that we need to get out of right before a dividend payment or anything like that. But I really liked that question. So thank you for it, Ethan.
Yeah,
Tim, next, when using ETF Smartfolio, do the dividends go back into the Smartfolio or sit as cash?
Here's how they do it. When a dividend, just the way all of our Smartfolios work, when a dividend is created, yes, the cash gets put into the account. However, the way our portfolios work is we look at how much cash is available. And if enough cash becomes available to buy another share of whatever stock is in that portfolio, it will actually use that cash to buy that next share. Yeah. But we do it on share size much more than we do it on a fractional share. So no, we're not going to buy fractional shares with your cash, but we will buy whole shares with your cash. So generally, most stock shares are generally, especially things that are paying dividends, generally stocks that are like AT&T or Verizon. It doesn't take much to buy a few extra shares. So yes, it does get reinvested as soon as the system sees it's capable within its mix of how many percent it should own of each stock of actually putting that money back to work.
Yeah, I would just say keep an eye on your buying power. I've seen a few people where their buying power is pretty large because they've had a lot of dividends that are paid. And maybe once a quarter or so, you might want to just take a look at it, see if you want to add any funds into any of the Smartfolios that you currently own. So we'd obviously like money working for us when the AI senses it's a good time for it to be, and we don't want too much just sitting on the sidelines doing nothing unless that's what you want it to do. Last question I'm seeing is from Denise, asking about the Start Engine campaign. Any updates here? I'm not sure if there's really much to update here. Do you want to just talk about it at a high level, what the opportunity was, and then, sometime in the future what the payout, I guess, could be, or the benefit?
The benefit. Well, first of all, thanks for buying some shares if you did through the Start Engine. The Start Engine we had a 56-day waiting period, I believe, after we closed the round. Or was it a 90-day one? And I think that expires sometimes in April. So at that time, Start Engine will get back to us and give us the complete accounting of all of the monies that were bought in shares. And at that point, we now know the accounting and how to adjust our capital table. But that's because it takes that amount of time, because some people put money in and then they have a buyer regret, they take the money out. So they allow a period of time for everything to settle and say the settlement period is over, which is many months, and here we go. So by the way, we're at the end of the third quarter, and we closed it at the end of the fourth quarter. So we should have some news on that probably within a week or two.
Yep. And Denise, the only thing to add there is it's not going to be like a Apple stock that you see on the, say Yahoo Finance or something where the price is fluctuating every single day. We're not a public company yet, nor may we ever be. But there will be updates to that as time goes on. But all things are still looking great. So, and like Kelly said, thank you for the investment.
Yep.
I just saw another one pop in, so we'll answer that. Kelly, why don't you look for your favorite question? We'll pick a winner and get on with the rest of our afternoon.
I already picked mine.
I don't know how to say this person's name, so I'm sorry. Joya, maybe? I'm sorry, I probably butchered it. But basically, what's the optimal starting point for a small investor? I'll just start by saying that every Smartfolio has a $500 initial investment that is the minimum. You're welcome to start there. You can, put more in as well, but 500 is the absolute minimum.
And I'll answer it maybe a little different way. First of all, as soon as you invest anything in money in anything, you pay attention to it. You don't pay attention to the money you haven't invested. So a lot of times what I do is I would tell people, if you haven't invested, I recommend you open up an account, buy a little Bitcoin or something, and you will pay attention to it, because even $500, there's a chance it could double. And if you see something like that occur, you will pay attention. So the best time and the optimal amount of money, it is not about the optimal startup money you would put into the market. It's about starting with something, having an account, putting something in there that moves with the market so that you can pay attention. It's really that. That's how you start, by paying attention to something. Another way you can look at it is, before anybody buys a car, they kind of look around the internet and they say, what do they like? You pay attention to certain things. You zoom in on something you like, and then you try to find, where can I get that the cheapest? Same thing with investing. It only starts once you have an account, put some money in it, and buy something in it that you are interested in and will pay attention to. So if you opened up an account with $500 and you bought AT&T, you're probably not going to pay a lot of attention. It doesn't move enough to make any difference in your life. So that's why I suggest you buy something that's volatile at first with a very small amount of money, pay attention, and then you will realize, hey, if you had a lot of money, you wouldn't want your money to move that around by 20% a day.
Right.
But if you have a small amount of money and you've got $500 and it moves 20%, you lose $100. It's almost like you were sitting in Vegas, but you pay attention because your money is on the line. So I think it's more of a mental thing, and an amount that squares with you mentally, where you don't have to worry if you lost it.
Sure.
And so there's no real optimal level.
Yeah. And it's always, if you can only start with the 500, it's always great to be able to contribute to that, whether that's on a monthly basis, weekly basis, you name it. But you start to accrue more buying power, and then you can start to get more shares of these things that are in the Smartfolios. So thank you, RH, for the comment. I can't say that I would disagree. We're trying to skip those dips. And should one happen, you're going to see the most benefit in what our AI provides. So I think that's all the time that we have for questions tonight. If any others spill in, we'll get to them next time. Kelly, I know you had your winner, so why don't you announce it, and I will tell them how to get their winnings.
It's very simple. It's the question about, hey, what about those dividends? If the AI takes us out of the money, out of the market, then how do I get the dividend? That's a question. Really, very few people, I can't remember anybody asking that. But it is something that I had to pay attention to when you build things where you put dividends in. How do I make sure I collect?
Right.
Have the highest probability of collecting on all the dividends offered throughout the year on a symbol. Right. So that's the best question tonight for sure.
Awesome. Well, Ethan, congratulations. Let me share screen and get the question out of the way. So again, just email mailbag@iflipinvest.com. I know you have an account, so just send us a screenshot of what you're invested into, and then someone on the team will respond to you with how to claim those winnings. I think that will do it for the night. Kelly, any last thoughts before we let everyone get on with the rest of their night?
Yeah, one last thought. So if you do win the Amazon gift card, I highly recommend for $4.50 the candied cashews. And that's all my recommendation is for there.
That's awesome.
And remember, I'm not an advisor. Everybody, I can't advise, but I do recommend those candied cashews.
Unless you have a nut allergy, I think that's the only way you'd say no to that. Well, awesome. Well, thank you for the nutritious input as well. And thank you everyone for joining tonight. Our next AI Circle is going to be in a couple weeks. It is on April 10th, same time as always, 5:30 Eastern. Until then, have a great rest of your night. I'm sure there's going to be some volatility by the next time we meet. So we'll meet again in a few weeks and see where we stand. So thanks, everyone. Have a great night. And thanks, Kelly, as well, for all your input.
Thank you, Lee. Thank you, everyone. All the best. Happy end of the first quarter.